This is Trade Alive with IUX, where markets come alive and trading gets real. Let's go live.
This podcast is brought to you by IUX Trading Platform, elevating your trading experience.
Welcome to the Deep Dive. It's really great to have you with us today. We're tackling something that's, it's pretty central if you're navigating the financial world right now. We're from IUX Education. Okay, so let's unpack this. We're diving right into the big question. Does social media and copy trading help or hurt?
Yeah, and what's really fascinating here, and you've probably seen this yourself, is just how accessible these tools have become. Social media, copy trading.
Everywhere.
Exactly.
Yeah.
You don't need to be some Wall Street insider anymore. Basically, anyone with an internet connection can jump in.
Right.
But, despite how widespread it is, the actual impact, the real balance of benefit versus risk, it's often really poorly understood. And that's why critical thinking is just so crucial in this information-heavy environment. And that's exactly the kind of insight we want to foster here in this deep dive.
It really is a hot topic, isn't it? So much discussion around it. And since many of you listening probably have some idea, let's just quickly refresh what copy trading actually is.
Good idea.
At its simplest, it's basically about automatically copying another trader's moves in real time. So think of it like this. You find a trader you like, maybe their strategy seems good, you allocate some capital, and then boom, their buys and sells get mirrored in your account.
Automatically.
Yep, automatically. When they buy, you buy, they sell, you sell. It sounds amazing, especially if you're just starting out right, a shortcut.
Oh, it absolutely does.
Yeah.
And if we kind of connect this to the bigger picture, that appeal comes from how simple it seems. And that, that promise of quick results without needing years of study.
The hard yards.
Right. The mechanism itself, it's easy to grasp. Find an expert, click a button, and theoretically you get their knowledge. But it's that very simplicity that often hides the much more nuanced, sometimes complex implications underneath.
An illusion of expertise, almost.
Exactly. It offers this sort of illusion, a shortcut, without actually requiring the effort to build real understanding.
You hit on something really important there, that illusion. Because even if the idea is simple, the actual mirroring, it isn't always perfect, is it? We're not just talking psychology here. For our listeners who know a bit, what are some technical things, maybe, like trade execution or capital management, that can make the copier's results different from the leader's?
Oh, that's a great question. That's really where the details matter. See, many people assume it's a perfect one-to-one copy, but that's rarely how it works out. Take slippage, for instance.
Okay.
In really fast markets, the price the lean trader gets their order filled at might not be the exact price your copy trade gets filled at. Even tiny fractions of a cent, they add up, especially over lots of trades.
Right. Accumulate.
And there's capital allocation. Are you mirroring their exact trade size? Or is it the percentage of your capital?
Important difference.
Huge difference. A lead trader might risk, say, 1% of their $1 million portfolio. That's a big chunk of cash. But if you're blindly copying that dollar amount with a much smaller account, say $10,000.
Ooh.
Yeah, you could suddenly be risking 10% or even more of your entire capital on just one trade. Completely throws your risk profile out of whack.
So if they buy 100 shares, you're not necessarily buying 100 shares if your account is way smaller. It should scale down.
Precisely. Ideally, yes, it scales proportionally. But if the platform's scaling isn't perfect, or maybe your minimum trade size forces you into a bigger allocation than you wanted,
You could end up taking on way more risk than planned.
you can find yourself overexposed very quickly. And let's not forget platform fees.
Oh, yeah, the hidden costs.
Right. Some platforms take a cut of profits, others have subscription fees, maybe even a markup on the spread. These costs seem small, but they chip away at your returns, especially if the lead trader is doing lots of frequent small profit trades. So yeah, simple concept, but the implementation, lots of details that hit your bottom line.
That's really valuable insight. Definitely more under the hood than it first appears. But okay, let's be fair. Despite that complexity, there are some potentially powerful upsides when these tools are used correctly. Let's pivot to the help side of the argument. People say this stuff is democratizing trading, right? Breaking down barriers.
And this is where, the potential for real growth and empowerment actually exists, especially for people new to the markets, or maybe those who felt kind of intimidated by it all before.
Yeah. And one of the biggest positives you hear is this idea of learning by watching. Think about copy trading not just for profit, but as like a real-time classroom.
Immersive.
Exactly.
Yeah.
You're not just reading about a strategy in a book, you're seeing a trader apply it, manage risk, make decisions live. Imagine watching someone navigate, say, a big market drop, seeing where they put their stop loss, how they adjust their position size.
When they take profits.
Right. It's almost like having a mentor guiding you, that whole earn while you learn idea.
That is a very valid point and often gets overlooked. For the right person, this kind of observational learning, it can be incredibly powerful. It gives you this unique peek into how successful traders actually operate moment to moment. That can really speed up a beginner's grasp of market dynamics, discipline. It's not enough to just mirror the trades. You need to actively engage with the why. Like review the trades afterwards, understand the context, maybe even keep a journal of what you're observing. That's how passive copying becomes active learning.
Okay, active learning. And beyond just watching, there's this access to expertise. Let's face it, not everyone has the time or maybe the inclination to spend years mastering technical analysis or digging through economic reports.
That's a huge commitment.
It is. So social media, copy trading platforms, they offer a kind of shortcut, right? Access to insights from traders who've already put in that massive effort, like standing on the shoulders of giants.
Well put. Whether you're interested in someone specializing in, say, tech stocks, or another who's deep into commodities, or Forex.
You can tap into that specific knowledge.
Exactly. That access can be a huge advantage, especially if you're feeling overwhelmed starting from scratch. It lowers that initial barrier and gives you a practical starting point to explore different strategies in different markets.
Yeah.
It's about leveraging diverse knowledge, not trying to become an expert in everything overnight.
And it's not just about the copying part either. There's the whole community and idea generation thing. If you curate your feed carefully, filter out the noise, these platforms can be amazing for finding trade ideas, getting a feel for market sentiment, seeing different viewpoints you wouldn't normally encounter.
Different analytical angles.
Yeah. You might see one analyst break down an earnings report, another highlight a chart pattern, then you read all the comments debating it. It's like this global 24/7 brainstorming session.
That community aspect, when used right, can be genuinely beneficial. Different perspectives, real-time chats, fast info sharing. It can help you spot trends, find opportunities, or even just challenge your own thinking.
Makes you on your toes.
Exactly. For someone who's actively trying to learn and expand their understanding, these platforms, if you approach them with a critical eye and filter the hype, can be a really rich resource. It encourages you to think about how these benefits fit your learning style. Do you learn by watching, by connecting, by absorbing from experts? But always remembering to do your own checks.
Okay, so when you put it like that, it sounds pretty good, doesn't it? All these benefits, making finance more accessible, speeding up learning, but.
Yeah.
And there's always a but in finance, isn't there?
Almost always.
For every success story using these shortcuts, there's often a cautionary tale hiding nearby. We absolutely need to flip the coin now and talk about the hurt argument. The core issue we need to explore is the real danger of relying on others without truly understanding the context. And frankly, without understanding yourself, your own finances, your own risk tolerance. It's like following a pro climber up Everest without doing any training yourself.
That's a really strong analogy. And
Yeah.
it raises a critical question for everyone listening. What are the hidden costs of this convenience? While the help side focuses on access and maybe education, the hurt side digs into the serious risks of, well, complacency and not developing your own trading skills.
Yeah, and one of the biggest risks seems to be this fundamental lack of skill development.
You're learning the mechanics of copy trading.
You're learning how copy trading works, but you're absolutely not learning how trading itself works. It's like trying to become a chef by only eating takeout. You enjoy the food, sure, but you can't cook.
You haven't learned the techniques.
Exactly. What happens when your favorite trader retires or just has a bad run? Or the platform disappears, you're left completely unable to navigate the markets yourself. You haven't built that independent judgment.
And that fosters a really dangerous dependency, doesn't it? The real goal of financial education, surely, is empowerment. If your source of expertise suddenly isn't there, or messes up, or just changes their strategy in a way that doesn't suit you anymore. Markets change constantly. Your ability to adapt needs to be just as dynamic.
I definitely see how that dependency is a huge worry, but isn't some exposure better than none at all? Even just watching passively must have some value. Why is that active skill development so vital?
It's the difference between watching a movie about swimming and actually being able to swim. Passive observation might give you ideas, maybe spark some interest.
Okay.
But it doesn't build the intuition, the discipline, or frankly, the emotional resilience that comes from making your own decisions and living with the outcomes, good or bad.
Especially when it's your own money.
Exactly. When it's your capital on the line, the psychology is totally different. Real skill comes from doing, from active practice, making mistakes, analyzing why they happened, and refining your own approach. Without that, you're always trading on borrowed confidence, and that can just evaporate the minute things get stressful or you hit a drawdown.
That makes a lot of sense. Borrowed confidence. Like that. And then, there's the whole minefield of misleading social media hype.
Oh, yes.
Social media, we all know, it's rife with survivorship bias. People love posting their massive wins, right? But how often do you see someone posting, "Hey guys, just lost half my account"?
Almost never.
It creates this completely warped view of reality. Studies consistently show most retail traders struggle. Like, the numbers often quoted are 70–80% or more lose money over time.
That's the stark reality.
But you'd never guess that from the highlight reels online. It totally misrepresents the actual odds and risks. And that just fuels FOMO, the fear of missing out. People see the hype and jump into trades without any real understanding.
It's a crucial point. This curated, often hyper-unrealistic online world can lead to really impulsive, irrational decisions. People get swayed by these apparent success of others, but they don't see the full picture, the risk management, the capital involved, the losses that aren't being shown. It makes trading look way easier and far more consistently profitable than it actually is. It misrepresents the grind.
Which leads us straight into another huge risk misalignment. This one seems critical. The person you're copying might have a totally different appetite for risk than you do.
Absolutely.
Their account size could be massively different. So imagine a lead trader risks, say, 1% of their $1 million account on one trade.
Okay, $10,000 risk.
Right. For them, that might be manageable, just a blip within their strategy. But if you copy that trade, maybe even matching that $10,000 risk amount, but on your $10,000 account,
You've just risked everything. 100% of your capital.
gone in one trade, potentially.
Yeah.
Blindly copying their trades means you're blindly copying their risk profile. And that might be completely wrong for you, for your situation. So what does this boil down to for someone listening, practically speaking?
It means you're basically outsourcing your financial well-being to someone whose motives, financial situation, and risk tolerance you might not fully grasp or share. That is a massive gamble. It's like trying to run a marathon using a sprinter's training plan.
Not going to end well.
You might keep up for a bit, but you're setting yourself up for burnout or injury because the strategy just isn't built for your capacity or your goals. You absolutely must ensure the risk you take aligns with your personal situation, not somebody else's.
Wow. Yeah, it's about losing that control, the independent judgment. So, okay, after hashing all this out, help or hurt? Social media and copy trading, where do we land? The simple answer, but maybe the most profound one, is they're powerful tools that can absolutely do both.
They can.
They aren't inherently good or evil, they're impact. It depends entirely on how you, the listener, choose to use them. You're in the driver's seat.
That's exactly the framework needed for using them well. Look, these tools can be incredibly helpful if you treat copy trading as a temporary educational phase, like a bridge maybe.
A stepping stone.
Yes, a stepping stone while you are actively studying the markets, developing your own skills, building your own plan. And similarly, using social media for ideas. Great.
Yeah.
But only if you still do your own thorough homework research analysis before you act on anything. Even, advanced features on platforms like IUX, they're most powerful when used by an educated trader who really understands what they're doing and why.
So it really emphasizes being proactive in your learning, not just passively consuming information.
Absolutely. And conversely, these platforms will almost certainly hurt you, probably badly in the long run, if you use them as a replacement for personal effort, for critical thinking.
No shortcuts to competence?
There really is no substitute for building your own knowledge, developing your own analysis, and taking complete ownership of your financial decisions.
Yeah.
At the end of the day, it's your money, it's your future, it's your responsibility. Use these tools to supplement your journey, perhaps enhance your learning, but never, ever let them define it.
That's such a clear and powerful message. You are in control of how these tools affect your journey. It all boils down to making informed decisions.
And it maybe as a final thought, as you reflect on this deep dive, consider how often, perhaps in other parts of your life, you're tempted by shortcuts. And what's the true long-term cost of those shortcuts? Especially when it's about something as vital as your financial future. Are you really investing the time to understand? Or are you just kind of hoping for the best by letting someone else make the calls? That self-reflection, I think, is key.
That is a fantastic thought to leave everyone with. Really chew on that one. Thank you so much for joining us on this deep dive into the complex world of social media and copy trading. If you want to follow along, learn more, you can definitely track us down at IUX Education. We've got learning materials, articles, more deep dives like this one, all designed for traders like you. And remember, tomorrow might be too late. Subscribe and share this episode right now. See you next time. Goodbye.
You've been listening to Trade Alive with IUX. Ready to put these insights into action? IUX is here to power your next winning trade.